is really exciting. I know there's a lot of diversity in this room with what everyone is raising capital for and what their projects are. Can we go ahead and just kind of start with answering some questions about what has been the biggest difference on you being successful with closing an investor and working with them over time, and what's something that you feel like is missing for other people, and just kind of like that little bit of extra that'll push them over the edge?
Sure. I mean, I think we're talking about niche strategies. I mean, investing in climate positive technology, in assetization of timber, alternatives to actually cutting trees down. The technology that goes into this is very, very new area, but it's in a very fast and large growing sector. And so for us working with limited partners, it was really about transparency in bringing them into the deal diligence process and showing them what was happening in the space, providing historical context so that they knew kind of what had been accomplished to date. And for many of them, they're holding, thousands of, sometimes millions of acres of land or timber or undeveloped property, being able to try out and use some of these technologies. So there's a category in our thesis called MRV, which is monitoring, reporting, and verification. This is now being done with advanced AI and machine learning algorithms on top of satellite imagery. So people are able to fly satellites over their property and kind of have a deeper and more meaningful understanding of what was actually in the forests that they were stewarding or that they owned. So it was really about that transparency process, like, hey, this stuff is so new, guys, bring us in, show us what's happening. And then there was a higher comfort level. And we still do that when we're syndicating deals as well. So.
Thank you. Anne, do you have something for that one? No? Okay.
So I would say very similar for us, the transparency, and I'd also say patience. I mean, we have a drug device combination product, so there's a lot of, as we're talking with investors, we get investors who are med device that don't understand the drug side. Pharma investors or biotech investors who don't understand the device side. So it's really been being patient and not trying to flood them with so much data, but actually take the time. And one of the earlier panels today, one of the individuals mentioned that when they look at an investment, they do their own diligence. And that's what we found is to not try and overdo the data up front, but give, speak to what are the key points, and then, work with investors to go through that diligence process.
Yeah, so I think of Peter Drucker's quote that business is innovation and marketing. And I think from day one for Sandlot, what's set us apart is one of our founding partners is very non-traditional in the space. We have two founding partners, one very traditional, common fund, portfolio advisors, New York background. Our other partner, Casey Baugh, he was in door-to-door sales his whole career, became extremely wealthy, getting equity in a company called Vivint Solar. I'm sure a lot of you have heard of it. Maybe you have Vivint Smart Home Security on your home. And so he had invested personally in about 15 different funds when we started Sandlot. And since then, we've raised $500 million in 3 years, which is pretty crazy for Utah at least. And what I think has made the difference is that innovation marketing and how we treat our clients. He comes into it from a client-facing perspective, where I think some of that can be lost. And what I mean by that is thinking, how can we make it convenient and easy for investors? So we deal with 700 LPs, ranging from billionaire clients who are investing $30 million a pop, and they've done $100 million, to retail clients who are doing $100,000 per investment. And we treat them the same in the sense that we want it to be world-class. We want them to have, think of subscription agreements. Probably, if even you have been in LPs in a fund or in an investment, the subscription agreement is probably the worst part of the investment. Takes you probably an hour to fill it out and figure out what are they asking for. We have a process and we've built out automation so that it pre-fills for investors. They can review it as long as they want. If they want to spend an hour, or if they just want to click through and sign in 2 seconds, they're done. Things like that, experiences, events. Most of our management fee goes back to the investors in the form of those events and experiences. And so I think innovation in marketing and focusing on how to make it the best experience for them in the marketing materials they provide and the experience they have as an investor.
Right. Like I said, Davinci is a financial services company. So we're basically a finance and technology company. Myself, I've been always fascinated by how technology shaped the world. And it started when I was 9. So I landed in France. I was 7, and I started programming at 9. So I couldn't even speak French at that time, and I could literally talk to the machine. So now this guy, who's talking now, is leading Davancy right now. It's been appointed as a CEO of the company, and we actually managed to put together a wonderful team, not only on technology, but also on finance. Some of them are here, by the way, so you can talk to them. I think mainly, I mean, what gives us an edge over other companies in the world, it's basically, I mean, we're truly financiers who are very, very passionate about technologies. And we want to make an impact. Talking about Web3, it's not so much just about technology. I mean, what give us an edge over everyone else is the comprehension of how things are going and be able to foresee the future, basically. And we're trying to convey the vision. And I think this is the edge we would have, is we have an accurate vision of what's going on on the financial industry. And yeah, so that's why we're here, just to convey all this, and hope you guys have attended my keynote this morning. Otherwise, we can talk later on.
So we take the Warren Buffett approach. We invest in what we know. We've been living and working in the Bay Area since 1978. Excuse me. Again, we buy value-add multifamily and multi-tenant office on the peninsula only. So that's south of San Francisco, which there is no rent control. And it's actually all the way down to San Jose, where there is no rent control. So we take our business very seriously. We are investing more equity than debt. We've been at it 17 years. We've never lost a dime, never had a capital call. So when people say you can't make money in the Bay Area, just try us. So we're a menu item, and again, as I'm on this panel, as a niche investment. This is truly a niche investment. So we are actually in this business for cash flow for our high net worth accredited investors only, as well as valuation. We believe that you increase NOI, you increase valuation. And believe it or not, I don't know why, but every 4 to 5 years, multifamily doubles in value. So we have a 20+% IRR consistently, and we're pushing out between 8 to 10% cash on a monthly basis in the Bay Area. So we think we do things right. Finally, though, we are fully vertically integrated. So we manage only the properties. We invest with our investors, and we have a full service management company behind it.
So I also have a tendency to invest in what I know. Crypto is more volatile than real estate, and I'm a big investor in real estate in my family office with my wife. But I don't know of any real estate that has ever gone 100x. And so there's been a lot of surveys saying that you're actually being more conservative to have 2 to 5% of your net worth in cryptocurrency than not to have it, because it does tend to go against the markets. It has historically been 65% non-correlated. There are little periods of time where it follows the NASDAQ, but we're coming out of the bottom of the market cycle. Our fund, again, Alpha Sigma, the first fund from Alpha Transform, 1,400% in 3 years. And as they say, past results may not guarantee future performance, but as Mark Twain liked to say, I'll paraphrase, it tends to rhyme. And I think my biggest challenge as a general partner is sort of convincing people and showing them the facts that at the bottom of each market cycle, crypto isn't dead. And at the top of it, it might be time to sell. And that's something I've been doing for the last 10 years. I started Bid Angels in 2013. The Bid Angels Fund in 2014, where we put $1 million to work buying Ethereum for 30 cents a token. Obviously, that did pretty well. And with Alpha Transform's first fund, we've had a number of tokens where we've been able to go and get 15, 20 X's in under a year. And that's sort of our expertise, along with being able to do algorithmic trading to, have the maximum stability in a volatile asset class, bake in most of the upside, and still, to the greatest extent possible, eliminate the downside. And, last year 14% up when the whole market was down.
Join the Family Office Club by visiting familyoffices.com. We look forward to seeing you at our next live event.